Welcome to the Shakaama Live Show with your host, Shakaama. So everything we're going to talk about is about uh, trying to convince you how easy it is to trade stocks. Why do I keep trying to convince you it's easier? Why do I keep trying to talk about your attitude? I'm trying to destroy this buildup that the only way to make money is to get a job. Not the only way to, and I want to sever any talk by a female to a male that says you should go get a job. You need to be stable. You have all these weird ideas. Why? Because I completely understand the psychology of women. Women don't take risks. Do you know that women aren't ditch diggers? They won't go on the deadliest catch ship. They won't build bridges. They won't build skyscrapers. I mean, actually go to the construction site. Why? Because they don't take risk. There aren't female CEOs coming out of my nose because they won't take risks. Why? Because they're not entrepreneurial. Because everything that a female is to be socialized to ensure their future. Now, some females only look from second to second about how to ensure their future, but most females look for how to secure their future long term. They make bad decisions with that, like, if I have a baby by this guy, he will like me. When in fact, they never go through the thought process of, and this is very important. I know you said this is not important, it's stock trading. This is very important. Why? Because a lot of the big, huge hedge fund managers have talked about this. Get away from women. They will destroy business, the planet. I'm not talking that they're going to take an axe and destroy the server. I'm talking about they're going to latch on to the most opportune man, or in this instance, the most inopportune man is, no, don't run for president. Who was the general, the black general that was conservative? He didn't run for president because his wife told him not to. True story. Whatchamacallit, his wife told him not to. So the first go round he didn't, and then the second go round he did. Dr. Ben Carson. So the first go round, his wife told him not to, and then he decided, I guess he ran away from home and said, okay, register me to run for president. I want to destroy that link. Stop listening to women. Women are socialized to only look for security, 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 security. And people play upon that. And to the destruction of both the woman and anybody associated with her. Gotta have security. Right? But honey, what about our freedom? What about protecting ourselves? No, you gotta have security. I used to play a game, and for those of you who want to skip that preamble, here's where the video starts. You can write this in the comments. I used to play a game called Vampire. And ironically, I played the secure vampire. So the premise of the game is everybody who plays in the game is a vampire, for the most part. You can have the occasional werewolf wander in, which is a bad idea, or the occasional fairy wander in, or the occasional ghost, or the occasional wizard, right? And that was about the crux of it. But we don't care about them, we care about the vampires, because that's what I'm talking about. Well, the construction of the character, you do impromptu theater with a character. So you make a character with all the numbers on it, right? the construction of the character is that you have generations of vampires. So the more powerful vampires are of a closer generation to the original vampire than the ones who are not as powerful, right? So the ones not as powerful, when creating the vampire, have way more points to spend all over the character. So this is to simulate that somebody brand new who was just turned into a vampire like yesterday would know about cell phones, laptops, Netflix. They would know about self-driving cars. They would know about plumbing, air conditioning, and lights. Versus a vampire who was more powerful but was really close to the original vampire would be really old but not have as much life experience as one of the younger vampires. So he'd be really old and powerful. So like the one who would be really old could punch somebody and knock them into, the nearest mountain. Versus the younger one can't punch anybody into the nearest mountain, but they could turn off the power on an office building and go attack all the people in the office building, right? That's the premise, right? So that's the dichotomy of old and powerful, young and agile, young and savvy, right? So I always played the older vampire. Why did I play the older vampire? Because when I got up there, you get experience points. I would put experience points into my stuff, put experience points into my stuff, put experience points into my stuff. So the pools for the older vampire is vast, right? Versus the pools for the younger vampire is not vast. You're like, one step from a human. So you could put points, you could have this young vampire and he starts out at all these points, but he's going to start hitting his max very early. Why? That's to simulate how weak the younger vampire is. So his total power structure has very small maximum points. Why am I saying this? I came across a day trader, who was telling us how he made $300,000 in 1 year. Okay. From something like $500. Okay. All right. Let's break out the calculator and see what he's talking about. So his premise was that he only wanted to make $10. But here's the deal. He bought as many shares as he could with the money he had. So it's not the power structure, or it is the power structure, but he wasn't greedy. He wasn't asking for much. He just wanted to make $10 here off of $10 of profit off of his trade, right? So the idea or the plan is to make $10. Here's the deal though. He went with the Shakaama way of crafting his trades so that eventually he made $80,000 in a day off of $10. So it's not the young vampire, it is the old vampire character structure where your pool just grows and grows and grows and grows and grows. So that he made $100 the first day because he could only buy so many shares. So then the next day he could buy more shares. $10. Next day, $10, more shares. Next day, $10 more shares. Next day, $10 more shares, right? So at the end there, he's buying 3,000 shares, 10,000 shares, 50,000 shares. So his pool grow. He's not doing anything differently. He's not looking for a mad rush to the top, from all the way from left field all the way, He's not doing that. He's just doing $10. Here is a concept that you need to learn, and you need to learn it now. It's math, and you can sit there and do the math. It takes twice as much money to recover from a loss than it is to just go up incrementally, right? So let's try and do this mathematically without touching anything, because I don't have anything here anyway. So like if you spent $10 in the trade and you lost $1 plus the brokerage fee, which I'm not going to calculate, but we're going to assume that, right? So now you're down $9. So the next day you're going to try and make the $11 or $20, whatever you were trying to make, right? You're going to have to dig yourself out of the hole plus what you're trying to reach. So there you go. So Warren Buffett says this is never take losses. But he also says don't leave money on the table. And he also says you need to, strike when the iron's hot. And he's talking about don't. He's saying, and of course he could tell you this. He doesn't do this. A lot of many people don't do this. To keep going, riding it up, right? He says this. Susie Orman says the same thing, but they both have like super secure stuff. They have vast amounts of super secure stuff that only make like 3% returns annually, something like that. So Susie Orman has a vast section of her portfolio that are just in bonds, which will give her like 1% or 3% or whatever. I read this. I didn't look at her books. So this guy was doing the Shakaama vampire scenario, elder vampire character building scenario, where the potential, the pools are huge, and you just keep increasing your numbers, right? You're adding to how many shares you can buy. So you buy more shares, $10, more shares, $10, more shares. So he ends up proving that he made like almost $500,000. Almost, right? He had some days or even a whole month where he was down. So he reassessed himself, reassessed his plan, and he says, "Oh, I need to go back to my original plan. Just making $10. If you do 30 shares one day, 35 the next day, however, whatever the cost of each share is, you look around, you can buy 300 shares at one spot. Now, he says also, towards the end, he was able to buy on margin. Here's a little thing. Margin means a loan. So your broker can lend you money in a share. So it's based on how much money you have with the broker. So let's say you come in and you made $300. Next day you might be able to have purchasing power up to $1,000 or something like that. $900, something like that, right? Or depending on who it is, I'm trying to remember the brokerage that he used was for beginner people, so they did things differently. You can even have up to 20 times the money that you have. So they will lend you up to 20 times the amount of money that you have. So you can purchase 10,000 shares of something, but you only have like, a few $1,000s in the brokerage. Anyway, there you go. I want you to think about that scenario of you don't have to aim for the hills, or you don't have to aim for the bleachers. You don't have to go for, you don't have to go for broke. You can just do it nice and slow. And this guy did in a year. He made practically $300,000 from 500. Yeah, slow and steady wins the race. Thank you all for watching. Leave a like.